Everyone, welcome back to another NFP sessions, and this is the month of May. Time flies in 2024. Let's do a quick audio check and let me know if everything is all right. Then we can get started. All right, seems to be good on my side. And results in USD. Results data is not even out until 30 minutes, and that's the whole point, right? So we're gonna go through as per usual some of the theories first, and as per usual, we are going to be doing our live trades. All right, so this is going to be our news trading session number 1 for the month of May, and we are going to start with the NFP sessions. My name is Vito Angelo. Let's get this started with a quick disclaimer. Any opinion discussed in this webinar or link to this presentation is provided as a general market commentary and does not constitute investment advice. News trading involves risk due to high volatility, and market reactions to news can be swift and unpredictable, which leads to higher trading risk and delays in order execution. Hopefully, we don't get too much volatility, but I fear for the worst for tonight. All right, so be attentive when determining the volume of your transactions and consider all possible risk factors. Okay, as per usual, we're gonna get you the code to double your deposit bonus, as per usual. And then you should already have access to the private Telegram channel if you registered for this webinar through the Octa FX website. Otherwise, and you would probably have joined this session maybe last month and you're already part of the Telegram channel. Regardless, you should have the link via email if you registered on the octa.com. All right, a little bit about myself. My name is Vito Angelo, and I've been a full-time trader with over 20 years of experience full-time. More than 20 years if we count the part-time things. But yeah, professional trading coach and technical analyst since 2007, expert in the Ichimoku Kinko Hyo technique, which is a Japanese charting techniques, and we've already done some of the recordings on that previously. You can find that on the Octa channel as well. I also run my own company, which is Zenifix, an independent market consulting company. I've been invited as a guest speaker at Trading Investing Expo across Australia, Invest in Singapore, as well as the ATA and the APTA conferences. All right, so we're going to go through some of the theories first. And if you guys are new, this is where you learn. If you guys have been around for a while, it's not too bad to catch up with what we've gone through. And the way we do things is we're going to go through the theories, and I'll talk about what the number is for tonight and give you some strategies that you can use to trade the NFP sessions. All right, so this is the code. It's Nonfarm 2024, and that's going to be the code that you can use to double your deposit bonus. So if you are depositing into your Octa trading account, make sure you are using the code Nonfarm 2024. It is a 100% deposit bonus or a double deposit bonus. It's valid until the 31st of December 2024. Okay, so I'm going to speed things up a little bit because I do want to talk more about the upcoming numbers. And don't really want to miss out on some of the stuff tonight. So we'll go through very quickly on some of the theories in terms of who the Bureau of Labor Statistics is. All right, so the BLS, or the Bureau of Labor Statistics, is a federal agency that collects and disseminates various data about the U.S. economy and the labor market. It also its reports includes the Consumer Price Index, the CPI, as well as the PPI, both of which are considered important measures of inflation. And within the labor market data, the most interesting aspects are obviously the number of people employed outside of agriculture. This is where we say non-farm, right? So non-farm payroll and the unemployment rate is going to be the main focus for tonight, more so on the unemployment rate numbers rather than the NFP numbers for tonight. But we'll break it down a little bit later. All right, so at the beginning of every year, the BLS basically publishes a calendar with release dates for the entire year. So no excuse to not know when the NFP is actually going to be released. It is scheduled for at the beginning of every year. But to keep it simple, basically the labor data, which consists of the NFP numbers as well as the unemployment number, is basically published every first Friday of the month. And obviously this is the first Friday of May. That's why we have the labor numbers, right? But if it falls on a holiday, the publication is usually postponed to the following week and occasionally to the Thursday of that week. Now, inflation data is typically published on the following Wednesday after the labor market data is released. However, for this month, we are actually going to skip a week The CPI is actually going to be released on the 15th of May, which is in the middle of the month, and we are also going to be doing a live trade on that CPI. All right. So let's break it down. What is the NFP? The NFP report is a monthly release by the U.S. Bureau of Labor Statistics that measures the number of jobs added or lost in the U.S. economy, excluding farm-related jobs, private household employment, and non-profit organizations. So if we take a look at what's the median number, or what's really kind of the threshold of being bad or good, it's 200,000, right? So if we look at a growth that's above 200,000, we consider that to be a positive sign of a healthy job market and also a growing economy. However, the interpretation of the NFP data can vary depending on different economic factors and the context it is released in. Okay, so we always take a look at the previous month's number and use that as a comparison. That way we understand, is it a much better number than the previous month? That's number one. Number two, we'll also take a look at the consensus, and during release, is the number above or below consensus? That's going to have an impact on it as well. But again, the context is important, because at some months it becomes really important that we need to get a good labor data. But sometimes, sometimes we don't actually look at the NFP numbers. We want to focus a little bit more on the other numbers, like the unemployment rate. Okay, so the context is important, and this is what I want to talk about tonight as well. Okay, so the NFP data is a crucial indicator of the state of the U.S. labor market and can significantly impact financial markets. A figure that falls below market expectations may be viewed negatively, while one that exceeds expectations or above the consensus may be viewed positively. And as such, the NFP figures are closely watched by traders and investors, particularly in the forex market, where currency pairs like Euro USD, Dollar Japanese Yen, Dollar Canadian, Pound USD, Aussie USD, they tend to exhibit high volatility in response to the report release. So anything that has USD in it will be directly impacted by this data. Okay, crosses are not going to be directly impacted. For example, the Euro Pound, the Euro Swiss, the Euro Yen, Sterling Yen, Aussie New Zealand, those are not going to be directly impacted. But anything that has a USD in it, and most major currencies has a USD in it, those are going to be directly impacted by the news. Okay, so again, as I previously mentioned, the release date is a special time for many traders who have learned to successfully use special non-farm strategies, which is something that we're actually going to share tonight. And after the release, there are actually going to be strong changes in quotations and even trend reversal. The problem with the release is that some of the algo, or some of the traditional technical analysis, stop working during the release. So you actually need a separate strategy to trade the news here. Okay, and in particular the NFP, there are some quirks to the NFP reactions that we are going to kind of take a look at. All right. So according to the BLS, non-farm employee classifications account for approximately 80% of the U.S. business sectors contributing to the GDP. Obviously, this is huge, right? 80% of the available jobs in the US are basically going to be the NFP numbers. Okay, the best assets again for non-farm trading are the Euro USD, Dollar Yen, Dollar Swiss, Aussie USD, New Zealand USD, Dollar Canadian, Pound USD. Any currency pair that's related directly to the US dollar is going to be heavily impacted. And gold typically does move as well, right? Sometimes it doesn't move significantly depending on the number that's released. How far is it above the consensus or how far below the consensus? But yeah, gold does get affected as well. All right, so the other data that we are going to take a look at is the unemployment rate, and the unemployment rate is calculated in percentage, and it is published at the same time as the NFP report. The unemployment rate represents the proportion of the labor force that is currently not employed but is capable of being employed. The U.S. unemployment rate is determined through a survey of approximately 60,000 households. So we have millions, tens of millions of people in the U.S., right? But the survey itself, the sampling is just from 60,000 households. Is it accurate enough? We'll take it. We have been using this number for years, decades even. So I would assume if they didn't change it, it's still good, right? But some of the criteria to be part of the survey, you basically need an individual to be classified as unemployed. Now, for them to be classified as unemployed, they must meet the following criteria. They must be without a job. They must have actively looked for a job in the past 4 weeks. They must be available to start a job if offered one. Now, for you to meet this criteria, the sampling, the idea of the sampling, it means that the sampling must have been done on people that actually claim unemployment benefits, right? If you take a look at every Thursday, there's actually a release, a data that's actually released, which is called weekly unemployment claims. These are basically how many unemployed people taking benefits of those unemployment claims, right? And the survey is basically done from people that actually take this unemployment claims, because for you to be able to get your unemployment claims, you must be without a job, and you must actually go to a center and look for a job actively. And if the center offer you a job, you need to take that job and you need to accept that job, okay? So that's why we take a look at the weekly unemployment claims, and this is why every single week on Thursday, the market does move significantly during the release of this weekly unemployment claims. And we can actually tally it up and get a rough estimate on whether or not this month's previous month's labor number is actually bad or good. All right. So for the number that's actually released today, it is actually for the month of April. So if we tally up the weekly unemployment claims in April, we can actually get a little bit of an estimate if there's actually a lot more people that's being unemployed, or there's actually less people that is being unemployed. All right. So if a person doesn't meet this criteria, they are not considered unemployed for the purpose of calculating the unemployment rate. So the sampling, it's actually pretty small, okay? And we can get a rough estimate on, from the weekly unemployment claims if we want to try and figure out what's the number that's actually going to be released today, okay? Now, the third set of data, it is actually called the U.S. average hourly earnings. This is a report released monthly by the Bureau of Labor Statistics alongside the unemployment rate as well as the NFP numbers. This measures the average hourly earnings of workers in the U.S. economy. The data is collected through surveys of businesses across various industries and encompasses both full-time and part-time employees, including overtime earnings. And economists, investors, and traders closely monitor this report as it can offer valuable insights into the state of the U.S. economy and its potential impact on inflation. So what we're looking at here is that when trading based on the U.S. average hourly earnings data, traders often scrutinize changes in the wage growth rate compared to the previous months, as this can signal the shifts in the labor market and potential inflationary pressures. The logic is here is that if you're earning more, if the number goes up, if the hourly wages goes up, that means people are actually earning more. And if people are actually earning more, they tend to spend more. And if people spend more, it tends to push up the inflation. So we can see the correlation between the labor market as well as the inflation data. Logic tells you that if there's actually high unemployment, then people don't spend a lot in the economy. Therefore, it will actually hamper the economic growth. At the same time, it also might push inflation down. Okay, but if people are working, and especially if their wages goes up, then they will tend to spend more, and that could potentially impact the inflation rate. It could actually speed up inflation. Okay. All right. So Higher than expected wage growth rate may indicate potential inflationary pressures, as I just mentioned, which can result in higher interest rates and currency appreciation. Because inflation goes up, logically, central banks, especially the FOMC, will need to either not cut interest rate or potentially hike interest rate if inflation continues to go up. Okay. Conversely, a lower than expected wage growth may indicate weaker inflationary pressures, which may lead to a lower interest rates and currency depreciation. As with any economic report, again, it's important to consider the broader economic context and other indicators when trading based on the US average hourly earnings data. Okay. All right, I'm going to go through some of the strategies, and I think we do have a little bit of a time here. There are a couple of strategies to trade the NFP sessions, right? You can trade before the NFP, so that would be considered a pre-NFP trading. So for pre-NFP trading, it is basically to trade the market's anticipation of the NFP data release. So if you're looking at this week, for example, Monday to today, before the news gets released, everyone is pricing in for the NFP to be bad, for example, then that would actually push the US dollar down a little bit. Okay, so this approach involves opening positions in the days leading up to the NFP release, with the expectation that the market will begin pricing in the anticipated NFP outcome. And you will need to close your positions before the actual NFP release to avoid extreme volatility that can follow. So the logic is, if you want to trade based on the assumed consensus, then you would actually already place your trades, and you should be getting out of your trades right about now, okay, because you don't want to get caught in the volatility. Now, what we're actually going to be doing tonight, we are actually going to go through with the straddle strategy. So the straddle strategy involves placing two pending orders, a buy stop and a sell stop. And if you're new to this, we are actually going to have a special session to talk about this pending orders. That's going to be next week on the 8th of May, right? But for this one tonight, we are actually going to use the buy stop and the sell stop, and we want to place that above and below the current market price just before the NFP release. And that way you can potentially profit from a strong price movement in either direction. And once one of those orders is triggered, you will need to immediately cancel the other order to avoid being exposed to further market fluctuations. And let me just give you a fair warning. There is a high probability that we might actually get a little bit of a whipsaw tonight, depending on the data that's actually going to be released. So just a little bit of a fair warning. Okay, so hopefully that doesn't happen, but occasionally it does happen. So that's part of the risk of using the straddle strategy. Hopefully we didn't see that. Okay, but I'm going to limit the number of trades that we're actually going to be placing tonight. I don't want to place a lot of orders for tonight. There are some exceptions that, for consideration, we might actually avoid the dollar Japanese yen for tonight. Okay, but we'll go through with the rest. All right, so straddle strategy is the first one that we're actually going to be using. And then the second one is that we could fade the initial move. Now, this strategy involves waiting for the NFP release and observing the initial market reaction. And once the initial volatility subsides, you want to look for opportunities to trade against the initial move. This approach is based on the idea that the market often overreacts to the NFP data and that a retracement or reversal is likely to follow. Obviously, if you don't want to trade tonight, that's completely fine. We'll go through with the data release, and if you feel safer, and I think a lot of swing traders would prefer this, they will trade post NFP. So they'll wait until the dust has settled. They'll take a look at the number, and then look at the market reaction before placing the position. You can actually wait for this to happen. You can wait for about at the very least about 15 minutes to an hour until everything settles down, and then you can analyze it properly. By then, your technical analysis should be working fine. Okay, but swing traders will probably wait for this. They have a lot of time, and some traders will actually wait for the Asian session on Monday before placing their orders post NFP. Okay, so yeah, again, good day. Agreed, whipsaw. There's likely going to be a whipsaw tonight. I'm just giving you a fair warning because the numbers that we're looking at, it's really kind of unique. All right, so we'll take a look at the NFP numbers first. This is what the numbers are actually going to be released. We have about 4 minutes to go through this, right? So the NFP numbers, the previous number was high. It was double what the consensus was. That was extremely high. So we're looking at 303,000, and we consider that to be, yeah, you know what, it's really high. We don't expect that to happen every single month. So it's normal for the market to take a look at this month and say, yeah, we are expecting a little bit less than last month. That's completely okay. It's not bad, okay? But the consensus is at 243,000 and the forecast is at 238,000. What if the number doesn't come in at 243,000? What if we get something below 200,000? Okay, that's below the consensus, that's below the forecast. That's going to impact the dollar negatively. Okay, the US dollar is going to get impacted negatively. Now, for the non-farm payroll number, I'm not expecting a lot of difference for tonight. I think we are going to get a number around the consensus. If we take a look at the consensus and the forecast, it's very small, the difference. We're looking at about 5,000 difference in terms of the consensus and forecast. So we might get 250, we might get 240, but we're not going to go too far away from the consensus. So I don't think that's actually going to be a huge impact into the market. The unemployment rate for tonight is expected to remain stable at 3.8%. Now, if we tally up the weekly unemployment claims, it does point for potentially lower unemployment rate. So we might actually get a number at about 3.7%. Now, if that happens and the NFP comes in at consensus, then we might get a little bit of a stronger US dollar. I think that would be scenario number one. Scenario number two, we go above consensus for the NFP numbers and the unemployment rate remains the same at 3.8%. Then for that, I don't expect a huge movement. I don't see a huge benefit for the US dollar. Scenario number three is that we might get consensus above, we might get the NFP above consensus and the unemployment rate falls to 3.7%. That's going to be super positive for the US dollar, okay? The last scenario is that we get the consensus, the NFP below consensus, and the consensus has to be below 225,000. And if we get that and the unemployment rate goes up to 3.9%, that's going to be negative for the US dollar. You are going to see an immediate gain on the Euro USD and the Pound USD and potentially gold as well. Now, average hourly earnings is not going to be a huge impact for tonight. But obviously, once all the data trickles in, we will factor that in. But for now, we're not expecting the average hourly earnings to play a huge part, at least not on the monthly change. On the yearly change, we're expecting the number to remain above 4%. Right? If there's a surprise that it dips below 3.9%, then yeah, it might impact the US dollar negatively. But the main focus for tonight will be the NFP numbers, and in particular, the unemployment rate. There should be an extra focus for tonight on the unemployment rate because, again, last month's NFP number was, yeah, it was good. But that's a number that we don't expect to happen every single month. And if we get the NFP number as per consensus, that's still going to be good. It's still going to be above 200,000. And I think we are probably going to get a downward revision for last month's number. We might see the 303,000 revised down to maybe about 270, 280,000. So I don't think that's going to be a huge gap on the consensus. The unemployment rate, though, plays a huge part for tonight. From what we can tally on the weekly unemployment claims, we expect the unemployment rate to potentially drop to 3.7%. This is going to be below the consensus. The surprise here is that if the unemployment rate goes up to 3.9%, okay, that would be a surprise to the market. So for tonight, we're not expecting a lot of surprises. I'll be honest with you, we're not expecting a lot of surprises. And the problem with tonight is that we already saw the market starting to move. We have a few more minutes, obviously. We can place the sell stop for the Euro USD, but I'm a little bit reluctant on placing a buy stop on the Euro USD just because the market has already pushed up. We're no longer in an accumulation phase. We're no longer able to kind of cage up what's going on. So for the Euro USD, this is actually going to be just one position, which is going to be the sell stop. It will be hard to place a position for the Euro USD with a buy stop because we don't have a significant high. Price is already touching the high on the 25th of April. So if you do want to place a buy stop, it's going to be risky and you need to have this a little bit further, right? You might want to have it about 1.0770. That's probably going to be all right. But the sell stop, we can place that about 1.0720, okay? So that's for the Euro USD. The Pound USD, this one here might still be okay. We can still place a buy stop just about there. Put it a little bit higher, maybe about 1.2575 for the Pound USD. All right, that's going to be the limit anyway. That's the daily resistance on the Pound USD. The sell stop, if we go by the hourly time frame, you do want to have it a little bit lower. So the sell stop for this one here is going to be at least at about 1.2550, right? That's at least. I would probably have it a little bit lower, maybe about 1.2540 or 45. That would be the safer sell stop on the Pound USD, okay? Where did I get out on my dollar yen? I got out 155. I'm not in that rally to the upside on the 160, but yeah, I'm already out long ago. All right, the dollar Japanese yen, this one here is going to be tricky because of the intervention that happened, and obviously there's a lot of volatility with the dollar Japanese yen. I do want to caution you, we might actually skip the dollar Japanese yen. This is just a huge risk in the market at this point in time, okay? So be very careful if you're trading the dollar Japanese yen. I would caution you not to trade it because it's just going to cause a lot of volatility. And considering where it is right now, we might actually dip a little bit and then bounce off 152, 151. It might trigger the sell stop and it might actually reverse up. So it is a little bit risky. All right. And in terms of placing the buy stop on the dollar Japanese yen, this is actually going to be tough. Because where are we going to place the buy stop? Is it going to be here at about 153, 154? You know, where is it going to be? Because we don't have a significant swing in the market, especially not, at least not on the hourly time frame. Because the significant swing is going to be 156. The problem with this, if it rallies up too quickly to the upside, we might actually see, you know, intervention happen, or people are actually going to be scared of it and they might actually get off their position, right? So the next one is going to be for gold. You can have the buy stop a little bit higher, about 2310. You can have it there. The sell stop for gold is actually going to be a little bit lower, below 2285. So the distance, it's quite significant as well. The difference between the buy stop and the sell stop is going to be about 26 bucks. Yeah, so be very careful. The range is pretty wide. The Euro USD is tricky. Again, the sell stop is all right. The buy stop is not quite all right for the Euro USD. All right. So we got Euro USD, we got Pound USD, we got gold. The dollar Swiss, I would avoid the dollar Swiss. It's already moving to the downside. Aussie USD, likewise, it's going to be really hard. The dollar Canadian as well. We are not looking at an accumulation phase at this point in time. Oil, you want to skip oil because it doesn't move just as it is. Nasdaq and the US 30, you might want to trade it, you might not want to trade it, but if you do, you can actually have a little bit of a sell stop for the US 30 just above the current range. So sell stop for US 30 is going to be at 38,417 and the buy stop is going to be at about 38,590. All right, data is going to get released anytime soon. All right, I think it triggered. It pushes up and it triggered a little bit higher than what we want, but we have the Pound USD and the Euro USD triggered to the upside. So I'm going to close the sell order for the Euro USD and the Pound USD, and the number, was it not loading up on my side? Do we have the number? Anyone can tell me that number? All right, US 30 is also triggered, so I'm going to close out on the US 30 as well. Gold also got triggered for a buy stop. dollar yen buy stop's not triggered, so I'm going to close that. Okay, NFP number comes in at 175. This is probably the worst case scenario. It came in significantly lower, and its previous numbers revised up to 315,000. So yeah, unemployment rate has also gone up to 3.9%. This is the fourth scenario. This is the worst case scenario. We have the NFP number below 200,000, and unemployment rate jump up to 3.9%. Average hourly earnings also decrease from 0.3 to 0.2%. So yeah, we might see a little bit of a whipsaw soon. So if you want to get in, if you're already in, you might want to get out as soon as you can. Gold is not reacting pretty quickly. I think our buy is a little bit too high for gold. So I think gold, we might actually need to close that out very soon. But yeah. Euro USD is already pushing above 1.08. The pound USD is already pushing above 1.2575. This is pushing about 1.2625. I don't think this is a mix. I'll let this trade run. I'm not too worried. This should be a little bit more one directional. All right, take a look at the NFP numbers. Previous number was revised, right? It was up from 303 to 315. Market is expecting 243,000. We got 175,000. So this is negative for the US dollar. The unemployment rate, as I say, is going to be the much bigger factor because this is where the surprise is going to be. Previously at 3.8%, we got 3.9%. As I said, when we tally up the weekly unemployment claims, it should actually point to a lower unemployment rate. So I think this is a surprise to the market. And if we take a look at the combination of the two, this is going to be negative. Add in the average hourly earnings, which is expected to remain stable at 0.3%. We got 0.2%. And the year-on-year number has dropped down below 4% to 3.9%. Participation rate remains the same at 62.7, not that big of a deal. If we take a look at the government payrolls and the manufacturing payrolls, it's stable. But private NFP number has slumped down. So we know where are we losing the NFP numbers. We're losing it from the private sector, not the government sector. Okay? But overall, this is a negative for the US dollar. So I'm not too concerned. This should be one directional on the movement here. But yeah, if you have the position on gold, though, I do want to caution you on gold. I'm not that confident on gold. So, if you're able to profit a little bit on gold, feel free to get off the position on those. All right. And if we tally up the numbers, I think gold is the one that's pushing our positions up, down a little bit. For the Euro USD and pound USD, I don't have a problem with that. We are currently running about 20 pips. Really depends on what you want to do with that. I'm not too confident on gold. Okay, so give or take, I do need a stop loss for gold, right? So definitely want to have your stop loss at about 22.90. It's going to be a little bit further below. For this one, for the stop loss, on the Euro USD, you can have it at about 1.0725 if you want to. I got triggered a little bit late, right? Because our buy stop was about 1.0750. I think this one here got dragged up to about 1.0780. So just in case, depending on what your positioning is, you do want to start having a stop loss in the market. For now, the logical stop loss is still going to be at 1.0725. The pound USD also, we got dragged up a little bit higher, but for this one, your stop loss is going to be about 1.2525 for the pound USD. The dollar Japanese yen has slumped down even lower, and I do want to caution you a little bit. At about 152 and 151, it might actually bounce. All right. So the dollar Japanese yen is a little bit unique. Yeah. Nasdaq, do we have Nasdaq here? I've got the Nvidia here. Nasdaq is here. It's good, right? Feel free. There's going to be a little bit of resistance at 18,000 for Nasdaq, so just be mindful of that positioning. The US 30, this is kind of slow, right? So we'll see what happens. Again, my concern is actually with gold. I'm not too confident with gold here. I don't like gold because this is the one that's dragging our positions. I might see a little bit of a fade here, but for gold, it's really hard for this one to break that 2,300 barrier. So as a matter of fact, if we saw that kind of a bad number, we should already be exceeding 23.25. We're not exceeding 23.25, and I think that's going to be a problem for gold. So ideally, if you can, right, minimize your losses on gold if you just had a buy position. I am a little bit concerned about gold, and I think that's the only one that's kind of holding us back a little bit right now. Yeah, the NFP data is really surprising. 175,000 is a huge surprise to the downside. It's what, 80,000 below the consensus? Huge, right? The biggest surprise to me is going to be the unemployment rate, because I did my maths, right? We tally up the weekly unemployment claims, continuous jobless claims for 4 weeks for the month of April. It's not supposed to be at 3.9%. So yeah, it is a huge surprise. All right, are we expecting a fade for tonight? I don't think we're actually going to be expecting a little bit of a fade for tonight. The fade won't come back to about this area. We're probably gonna get a fade back about here. Let's see if I can. Yeah, we're probably gonna get the fade limited to just about this area there, right? We're probably gonna be looking at that area as the order block, and we're probably expecting a fade to happen maybe at 1.0750 if the market pulls back as low as that. I doubt it, right? I doubt it. I doubt we're actually going to get a fade to that level. And also taking a look at the pound USD in terms of whether or not we're actually going to get a fade. I doubt it. We might actually pull back a little bit lower, maybe max to about 1.2550. I highly doubt it, right? We might see a return towards 1.2575. That's pretty much it, right? As I said, gold is the one that's pushing us down, right? Significantly. I'm not too confident on gold. The others are all right. So gold is the only one that's dragging us down. And the reason for that is that it didn't break 23.25. It just doesn't have that drive right now. And especially with the FOMC decision that we had, it's very hard for gold to push up just because we're going to have a higher interest rate for a little bit longer. So I do expect gold to actually break a little bit lower to the downside. But it is what it is. Just not that confident on gold. So if you can get out from your gold positions, do get out. I'm just leaving it as just as an example. I'll see how far down it is, but about 2300 I'll probably start getting out of my position on gold. That's really the limit. If you really want to go with the swing low, then obviously your stop loss will need to be below 22.95. Yeah, I think gold will go to 22.50, and I'm just not too keen on gold at this point in time. I just don't see the shine for gold in the current situation. But everything else, we're probably on track. Do be mindful though. There are still going to be limits in terms of how far we can go, especially for the euro. The euro right now is at previous sell-side liquidity, so we know 1.08 is a significant number. Whether or not in the next 20 minutes it can actually break above 1.0825, if it's able to do so, then yeah, I think it can actually push higher, maybe above 1.0850. But if it's not able to break 1.0825, get out, right? So the logic behind the Euro USD that we have here, you're probably going to be looking at about 1.0825 as your exit level. If it's about there, if it doesn't break, then you want to get out. But for now, you can adjust it at 1.0850. Once it breaks 1.0825, then you can move your stop loss. You can lock in some of the profits if you want to. But yeah, we're probably going to be targeting 1.0850 on the Euro USD. For the pound USD, if we go with the pound USD, we are already back up above this. It is new though, because we haven't had a daily close above it. So a daily close above 1.26, it's significant, but the next level that we're aiming for is going to be 1.27. So for the pound USD, I think in terms of target level, we can push a little bit higher to about 1.27. That's a little bit more significant. Okay. The US market should be all right. I mean, if we take a look at the Nasdaq, I think it should push a little bit higher. The US 30 probably a little bit more stable. We didn't get filled at a good price, unfortunately, for tonight. But if you are filled at a good price, you should already be in profit. I think you should get out for the US 30 here. But if you want to aim a little bit higher, you can go for 39,000. But I don't think you're actually going to reach 39,000 today. Probably next week, you might be able to push towards 39,000. Concern that we have here is that if we measure the swing that we're looking at, the 127.2%, it's about 38,831. Oh, let me just bring it up here. So, all right. So you got two swings on this one here. Number one is obviously the much bigger swing, right? You're going to be looking at 61.8% as your target, which is 39,000, as I previously said. Then there's actually a small swing there's a new swing. The 127.2% is actually about 38,840. Okay, so that could be your target if you want to get out. So it really depends on how you view this, and if you are doing this for a swing trade. If you're doing this for a swing trade, you should find a potential move towards 39,000. So for Nasdaq, the position that we have, then yeah, you can move your target level to about 39,000. That's pretty much it. That's the limit on how far we want to push it. Okay. Gold's collapsing. I don't like gold at all, right? Because if I remove gold, we're probably still in profit. But gold, it's really crushing it right now. So be very careful on this one. The pound USD target is going to be at 1.27. In terms of stop loss, you want to have it about 1.2525. Or you can move your stop loss to break even if you're worried. Or if you're happy with what we have right now, which is about 23 pips or maybe more on your side, if you didn't get a slippage, you probably be in profits by about 30 pips-ish. If you want to get out from it, I think it's all right because it's on a Friday anyway. All right. So what is going to happen? A rally in the market? I think we have the worst case scenario for the US dollar. The numbers both for the NFP, not both actually, for all three numbers, the NFP numbers, the unemployment rate, the average hourly earnings are all below the consensus. So yeah, it's negative for the US dollar. Yeah. Next, hike rates. I don't know. For interest rate hikes, I think the possibility for that to happen would be if the inflation number climbs up above 4%, but we'll wait for that on the 15th of May. Does the news impact Bitcoin? Maybe it does. Let me take a look. I'm not sure. Bitcoin is not supposed to be impacted by it, but if it does, we're not looking at a huge gain on it anyway. All right, we just transitioned. We do have a lot more resistance on Bitcoin. We have one at 61,000, 62,000, and then about 65,000. So there's actually a little bit more resistance for that. Okay. This is my main concern right now. I just don't like the way gold is, and as I said, I'm not too comfortable with the trade on gold, so I gave out a little bit of a warning just now. This one here is not looking too healthy. It's just not winning it right now. Okay. Fundamentally, there's nothing positive for gold at this point in time. We don't have geopolitical tensions. We don't have a lower inflation. We have fewer expectation of a rate cut from the FOMC. So that's actually limitations for gold, right? Technically, this is due for a much deeper correction. As I previously mentioned on the Monday's outlook, we're looking at 2250, potentially a deeper one towards 2200. US bond to the moon. How much money starts chasing US bond? Not quite sure by your question, but let's take a look at the 10-year yield. We are looking at the yield collapsing right now. But overall, if we take a look at it, I think it's still pretty high, right? The limit for this one here is about 4.25% for the 10-year yield. Anything lower than 4.25%, I think that's where, you know, we might see the bond market really picked up. But for now, yeah, the yield is probably still going to be in that correctional phase as it is. Okay. All right, let's take a look at the damage that we have from gold. It is what it is. I don't like gold at all, as I previously mentioned. I much prefer a short below 2300. In fact, you know, for gold, if you don't have a position for gold, you might want to have a sell stop at about 22.95 for gold, because that would push it below 2300. And, you know, you can go for a much deeper correction towards 2250 for gold. That makes a lot more sense. And then your stop loss is going to be about there. Don't like the NFP because it's Friday news. Yeah, I don't mind the NFP numbers. I'll be honest with you. There are obviously tricks to that. But for tonight, the number is just so negative. You know, even with the fade, we're already 50 minutes in. We're not looking at a fade happening. So if a fade were to happen, it should happen very soon. And let me just fix this fib here. Actually, you know what? I'll just use this. All right. If you're looking for a fade to happen on the euro, for example, you can actually measure it. Let me just hide the Ishimoku and the pivots. We're at 1.08. That's where resistance 3 is currently located. Right? Am I concerned at this level? Yeah, very concerned, because 1.08 is actually pretty significant. The fade wouldn't happen until price moved down below 1.0780. So you can actually trade this a little bit lower if you want to. You can have your stop loss at 1.0810 if you want to, and then go for the fade. The problem with the fade is we're probably just going to be looking at a return towards 1.0725. About 50 pips on the Euro USD if you want to trade the fade. Risk reward ratio is still 1.1.5, right? 1.5 in terms of risk reward ratio. I don't think it's actually that bad. You can trade the fade if you want to, but for confirmation, you want to have market below 1.0775. Okay. Okay, so that's on the Euro USD, and if we go with the Pound USD, we're looking at 1.26. Obviously, we have that resistance at 1.2625 on the Pound USD. Okay, so we are facing that resistance at this point in time. For now, we did exceed 1.618, so we have surpassed that. And if you're looking for the fade for today, then we want to see at least about 23.6% correction, and that would push it below 1.26. And for this to happen, we need at least a confirmation on the 50-minute time frame, all right? Because we're already on the last 50 minutes on the hour. So you can actually wait for this on the hourly time frame, or at least on the 50-minute time frame. But let me warn you, this is going to be a little bit risky. Very risky, right? Could this be a dead cat bounce? If you're saying that, I don't think it's actually going to be a dead cat bounce this point in time. I think there are reasons for the US dollar weakness, right? For now, we saw how dovish the FOMC was this week, and you know, with the NFP number being as it is, the labor market, it is not the main focus for the FOMC. So the lower labor market is not going to impact the FOMC's decision in interest rate. But we can't deny the number is bad. 175, it's really bad. It's below 200,000. And if we measure it from the previous month's number at 315,000, we basically lost half of it, right, in terms of gains. The surprise is definitely the unemployment rate. It goes up to 3.9%. So, you know, overall, we're still going to be looking at, you know, a stronger US dollar in the future. But if you want to trade the fade, which is part of our strategy, that you can actually trade the fade then for the fade to happen, the Euro USD needs to be below 1.0775. The Pound USD needs to be below 1.26 for the fade to happen. Okay. All right. So yeah, huge damage on gold, which is causing a lot of havoc. Hopefully you guys managed to get out from gold. If you have a gold position, if you had a buy position, and if you managed to get out, I think that's great. If you didn't manage to get out, you still need to have your stop loss at 22.95. But I would also at the same time have a sell stop at 22.95, right? Because if it does break lower and we see that sharp rejection that we have on gold, it would likely trigger a move towards 22.50 for gold. And if we take that into consideration, if we short gold below 22.95, right, and you go for 22.50, so let me just adjust that about there. Your stop loss would be at 23.20 and your target is going to be at 22.50. You're still going to be in for a 1-to-2 risk reward ratio. However, do note you're risking $23, $24. That's huge depending on your equity. So, make sure you understand what you're doing if you're trading gold. Otherwise, for the currencies, you can keep your long position if you want to, or you want to get out from your current position. You can trade the fade if you want to trade the fade. Once price has dropped down below 1.0775, your stop loss will be at 1.08119. Your target is going to be at 1.0726, about 61.8% retracement. The Pound USD, for the fade to happen, it's probably confirming it right now. If it does close below 1.26, your target would actually be between 1.2525 to 1.25, right? Your stop loss will need to be up there at 1.2636. Max that you can aim for is about 1.25. Risk reward ratio is going to be what, 1.6, yeah, 1.69. Okay. Yeah, I'm super worried about gold. I don't like gold longs, right? And I've been warning you guys on gold longs. It's just that we don't have the driver for gold to be really bullish at this point in time. Yeah, look, I don't think the NFP has a huge impact on gold as it is at this point in time. It's just that fundamentally, from other factors, we don't have that geopolitical tension anymore at this point in time. It's kind of a little bit quiet. Gold doesn't have that shine, and if you take a look at oil prices, it also doesn't have that shine because we lose that geopolitical tension. And also the FOMC not wanting to cut rate, it's not going to be good for gold, fundamentally speaking. Yeah, you can hold long on the euro and pound if you want to, because for pound and euro, the logic is that we shouldn't be looking at a significant fade, right? Even like for example on the euro USD, we know there's a resistance at 1.08, and 1.08 is huge because 1.08, it's obviously the previous sell side liquidity, and that's also a psychological price level. If the daily doesn't exceed 1.08, we might see a little bit of a rejection, but there are still room from the momentum that we have here. RSI still has a lot more room to go. In terms of key levels from the Ichimoku cloud, it lies in at about 1.0850, right? So I think for Euro USD, it might actually still push a little bit higher. Again, don't jump in on your fade because I'll be honest with you, with the number that we have, I'm not too confident to fade it. If you want to fade it, there's actually a lot of risk because the data we have, it's super negative for the US dollar. Okay, so the Euro USD, if you have a long position on the Euro USD, then we'll go back to this and take a look at it. You want to aim for 1.0850, okay? So I'm not too concerned on the Euro USD and the Pound USD. And if we take a look at the entry that we have, it's technically not a fade because our buy stop was actually about here at about 1.0750, 1.0760. If you take a look at the positioning here and the entry that we have, it is about 20 pips in terms of slippage on the position that we have here. Similar situation with the pound USD as well. So depending on your position, if you get your slippage or you didn't get a slippage, you might be at a better position. Okay. All right. So yeah, with the NFP release, historically, what we do have is that we typically see a little bit of a fade, right? Market goes up, break out the range, come back a little bit, but then it'll typically go with the initial market movement that we have initially. Same here, we typically see a little bit of a drop down, a little bit of a pullback, and then market continues to push a little bit lower. All right, so before we wrap up for tonight, do you want to cover a few things on the summary that we have here? There are going to be three main strategies traders use to trade the news. Strategy based on two pending order settings that we have, which is the straddle. You can trade before the data is released, or you can trade after the data is released. Now, if you want to trade after the data is released, we have seen the numbers. It doesn't need to take long. But if you want to wait for a little bit, wait for about another 30 minutes once the dust has settled. Or you can wait until about another hour where the US market opens. Then you actually start to be able to see where the noise is, and you can actually start pricing in what's likely going to happen. And I don't think there's actually a mixed data for tonight. I don't think there's actually a lot of confusion. We're losing a lot of private sectors payrolls, and numbers just bad as it is. Unemployment rate has also gone up as well. Okay. All right. So again, this is going to be the code Nonfarm 2024. If you want to use the code to double your deposit bonus, it's Nonfarm 2024. Okay. All right. Any questions so far? I'm short on euro 1.081. I don't believe the euro. Look, you have to give some room for the dollar to kind of correct itself, right? And I think we're looking at it now. Stop loss for the pound USD for the buy position on the pound USD. The stop loss is located at 1.2525. I don't expect a fade. I'll be honest with you. I don't expect a fade to happen on the Euro USD or the Pound USD, right? If you jump in just now, I think it's a little bit too early. As I said, we need to wait for a little bit of a confirmation. We need for price to drop at least below 1.0775 for the Euro. And for the Pound, we need it to close below 1.26. What we're looking at, we saw a little bit of a bounce here. So I think we're still on track for a weaker US dollar, at least for tonight. Figures can be revised again next month, yeah, but it's just way too much, right? Expecting last month's number to actually be revised down. Last month's number was actually revised up to 315,000. So yeah, it is pretty strong. Yep. Next week we have our theory. So if you want to get more practice on your pending orders, you want to understand when to use the limit orders as well, then please come in for next week. That's going to be on the 8th of May. But for the inflation number, we are going to be having that on the 15th of May. Are we in a US recession? Definitely not in a US recession. I can assure you 1000% that we're not in a US recession. 1000%. All right. Okay, bad gold floating. Look, I'm not too confident with gold, but yeah, at the very least, you need to have your stop loss is going to be at 2295. And at the same time, if that happens, I would actually reverse my position. I would go for a short from 2295 to 2250. But as I said earlier, I wasn't too confident with the gold price movement. And when it was triggered, even though it runs to the upside, again, I warn you guys, you should probably get off your gold trade if you want to. I'm just not looking at a strong gold at this point in time from a fundamental perspective. Okay. All right. Cool. So what's next? Next week is going to be our new trading theory and practice. It's going to be on the 8th of May, 2024, which is going to be next. Is that next Wednesday? Yeah, it's going to be next Wednesday. So we'll take a look at some of the advantages and disadvantages of news trading. Most profitable news for trading. One of them is actually the NFE. The next one is going to be the CPI, right? And then we'll take a look at some news trading and price action, what happens during news releases. Then we'll cover in more details how to use the buy stop and sell stop strategy. What are we looking out for, and why I didn't look at some of the trades that we could have tonight, because it doesn't meet some of the criteria for the buy stop and the sell stop strategy, because we need that accumulation phase, we need that sideways formation, we need that corridor of volatility. We didn't see that happen on a lot of the currencies tonight, right? So if you want to find out more, jump into the session next week, and we'll also talk about the buy limit and the sell limit strategy. All right, so with that, have a fantastic weekend for all of you, and good luck with your trades, and I'll see you next week.